Rightio. I might, yeah, we'll just do a bit of an intro and then I guess we'll crack into the content. So, yeah, thanks for joining today with myself and Rhiannon. Hey, Rhiannon.
Hi. Mhm.
So Rhiannon and I both are mortgage advisors here at My Mortgage. Rhiannon in the Bay of Plenty and myself kind of in Cambridge, but we kind of, yeah, we look after people all over the country. So if you know anyone outside of the Waikato, by all means, you can put them onto us and we can help them. And we do lots of stuff virtually like this, and we do lots of stuff in person. And we seem to have people popping up all over the place, so we can make anything work. Cool. So today we're just going to chat a little bit about some first home stuff. So if you're looking to get into a first home, or you know someone that's looking to get into a first home, then this is kind of a sort of 101 on getting into into a first home. We'll cover some stuff around low deposits and a few other bits and pieces, but we'll run through that in a sec. Sweet. So if I just do that, that's working, eh, Ree?
Yeah, that's good.
Nice. So yeah, that's us. This photo was obviously taken in November of me with my silly moustache. Um, yeah, thanks for that. This is the crew, and actually, Rhiannon, you're not in there for some reason. You must have been away that day, but
We need updated photos, don't we?
we do.
Without the mo,
Yeah,
including
yeah,
myself.
yeah. So this is us. I don't know how many of us are there, but there's probably a good 17 or 18 of us now. Um, five mortgage advisors supported by a bunch of awesome people in the background that make stuff happen so that we can be out and about helping people do whatever it is that they want to do in terms of borrowing money, purchasing homes, and all that fun stuff. So, yeah, really experienced team in the background, people from all different sorts of walks of life in terms of experience. Not all of us are, ex-bankers or anything like that. And I think that probably brings a bit of perspective, different perspective from each person, and everyone has, yeah, something that they specialize in, and yeah, really good team. So, do you want to just cover off what we're going to run through?
Yeah, so we've got a few things that we'll go through today. I think that'll cover first home buying quite well and give you a good idea of what's achievable. We're going to go through low deposit schemes and grants. We'll cover off KiwiSaver, what you can use, what the requirements are to use your KiwiSaver. We'll do a bit of chat around guarantors and gifting. A lot of the time, there's family members that are happy to help out with their kids or family getting into first home, so we'll cover that off, and we'll also do some live Q&As from you all.
Nice, thank you. Yeah, so I guess let's crack into it. And deposits are always, a good place to start because I think that's the thing that most people ask about when they
Yeah.
first get in touch is how much deposit do I need? And I think I don't know, the media does a good job of confusing everyone. And there's a lot of information and misinformation out there around that. So we'll start with deposits and go from there. So actually, we'll just chat this through really quickly. Grants. So there are none, basically, is the long and
Very
short.
quickly, there's none.
So about 12 months ago, possibly, might have even been a little bit longer, actually. The first home grant, which used to exist, and it was a $5,000 grant for first home buyers, was unfortunately axed. So there is no longer really any grant that I can think of that we rely on day to day. Um, and so that kind of means that deposit, is sort of in your hands in terms of getting the deposit together. It's kind of up to you, right? So yeah, so unfortunately, no grant. We just put a straight through first home partner as well. So that was another scheme that was sort of axed at the same time as that grant. First home partner was sort of like a shared equity scheme where Kāinga Ora would have sort of a small stake in your property to help you kind of get on the ladder. And then the third scheme was first home loan, And that's the one that we're going to chat through today, which still exists. And we do heaps and heaps of approvals through first home loan for people with low deposits. And when we talk low deposits, we're talking less than 20%. So if you have less than a 20% deposit, all the way down to 5%, you would meet the criteria for first home loan. So we're just going to chat through some of those criteria, the reason why you'd go through that. And yeah, we'll roll through from there. Do you want to chat through that?
Yeah, I'm happy to talk through that. So, climate order first home loan is a really great product for first home buyers. It's backed by the government, and it basically allows first home buyers to get on the property market with as low as a 5% deposit, which is really awesome in this day and age when house prices are what they are. It's really hard to come up with that 20% standard deposit that most banks require. So there are some criteria around it. There are income caps. So I will tell you what they are. So if you're an individual person and you're wanting to buy your first home on your own in the climate order first home scheme, it is a maximum earning of 95,000. And if you are an individual with one or more dependents, that being might be you have a child or a couple of kids, then your max earning is 150. If you're a couple that you want to go and buy under the first home scheme, it is 150 per annum as well. So with the first home loan scheme, you need to have been in your role for 12 months. If you haven't been in your role for 12 months, say you worked as, for example, a mechanic at a business, and then 6 months later you changed and you were moving to the same role but for a different business, climate order will still consider that. So it's, yeah, if you're in the same industry, but if you've changed industries in the last 12 months, you would have to wait. They also want to see minimal debt. And so that being personal loans, etc. Correct me if I'm wrong, Smitty, student loan is fine. You can have a student
Yes,
loan.
fine.
And I believe there is a limit on how much money you can hold back as well. So if you're getting the first home loan, you can only withhold so much in savings as well. They want you to contribute as much as you can to your deposit. Yeah, that's that's the long and short of it, basically.
Yeah, I think you covered it pretty well. Like the deposit thing, I suppose they just want to see that you're putting, as much as you can into the purchase rather than
Mm,
suggesting that you can only put in a 5% deposit. So if you have 7%, they would kind of expect that you were putting that in.
yeah.
Obviously, because the funding is backed by the government, like they just want, people to be putting in everything that they can, I guess. And then
Mm,
minimal debt thing, like one car loan or something like that is relatively, fine, assuming that you can continue to service the car loan
mm,
alongside the home loan. Student loans are fine. It's just that if you got into a situation where you had, 4 or 5 different loans going on and maybe that short-term debt was more than what you were contributing in terms of the deposit, hey, we might have a challenge there. But yeah, it's still worth getting in touch with us at any stage just so that we can put a bit of a plan in place to make sure that when we submit your application that it's going to get approved. Um,
Also, I guess if you're not, don't let any of this put you off if you don't meet that criteria, because there's always we can forward plan, right? Like if you're so many months off fitting that 12 month criteria, or you've got the short term debt, we can put a plan in place for where you need to be. So yeah, that's always a good thing too, just to have a chat about.
yeah, I don't know about you guys, but I need someone to keep me accountable. So
Mm.
if you need someone to keep you accountable to,
We'll chase you up.
we'll chase you up. Yeah, that's it. Um, yeah, so I guess just some of the pros in terms of going through first home loan. When you go through first home loan, you basically get what we call special rates, or no low equity margin applied to the rate. So you're not really penalised like you would be if you went directly through the bank with a smaller deposit. You kind of get the rate at some banks anyway, that you would get as if you had a 20% deposit. So that's probably the main
Mm.
bit of going through this scheme. There is a one-off lender's mortgage insurance fee, which is basically just applied to your loan. It's 1.2% of the loan, and that just basically de-risks your loan for the lender and for KO. And so that just gets added. So like, if you had a 500K loan, there'd be a little bit of a fee, 5,000 and something applied to the back of your loan. So you don't need to come up with that money. We factor that in when we do your servicing calculations and figure out what you can afford. There's unlimited funding. So basically, what that means is that pre-approvals are open and available. So if you are to approach a bank through first home loan, they're able to provide a pre-approval basically all the time because the government's just backing that funding. Um, and there's multiple bank options, and you don't need to be with any one of these banks. And similarly, you could be with Westpac, but we could go to KiwiBank, just depending on your situation. So yeah, at the moment, Westpac, ASB, KiwiBank, and Cooperative Bank participate in first home loan, and yeah, they're all good options.
It's an awesome scheme for first home buyers. Really awesome.
Then to confuse things a little bit, if you don't fit first home loan criteria, there are some other options, and so we wanted to cover those off as well, um, because not everyone fits first home loan criteria. If we go back a couple of slides, like if you earn 154,000 per year, or if you have done over the last 12 months, it automatically rules you out, right? So and this is a very black and white criteria. If you've earned a dollar over 150, over the last 12 months, they basically say you're not eligible. And so then what does that mean for those people that don't meet this criteria? Well, there's options outside of first home loan. Oh, but I've jumped ahead, so we'll chat about that after this. Do you want to run through Tom and Sarah?
Yeah. Okay. So this is a really classic first home buyer situation that we have. We've got Tom, who's the apprentice builder. He's on 68K. We've got Sarah, who's an ECE teacher on 70. Their combined KiwiSaver is 65K. Their vehicle finance is 11. So we were able to get borrowing approved for them at 685, allowing them to purchase for a price of 750, but still only having that 65K deposit. It yeah, it makes purchasing in that price point much more achievable for them, and they're still within those criteria, those income brackets, low debt, low deposit.
Sweet. And yeah, this is just like an everyday situation,
Mm.
right, that we see all the
Mm.
time. And I think it's just to demonstrate, like, hey, two sets of KiwiSaver. Like most people, by their mid 20s are kind of looking at 20 or 30K in their KiwiSaver, and so it's
Yeah.
just kind of to demonstrate,
What's
how.
achievable. Yeah. A lot of people don't realize that it's achievable for them as well.
Yeah. And even if one of these people had less in their KiwiSaver, like if they had 45K as a total, they'd still be able to, borrow the 685. It'd just reduce their purchase price a little bit.
Hmm.
Um, so it totally depends on, your own personal situation, obviously, but this was just kind of to demonstrate and to go, if any of those things resonate with you or that kind of looks like your situation, then you're probably a good first home loan candidate.
Yeah.
Um, so this is right. So this is outside of first home loan. So if you don't meet criteria for first home loan, this is kind of our backup plan, if you like. Do you want to chat through it?
Yeah. So not everyone obviously fits the first home loan criteria, but also not everybody has a 20% deposit. So there is lending available from banks for as low as a 10% deposit. Um, The lending is more limited. So as Smitty said, with the Kāinga Order first home loan, that's unlimited. It's always open for pre-approval. However, there's only a certain pool of money in that 10% LVR space. So not all banks are open to it. Some of them will require you to have a live application, and some of them will do pre-approval. Um, so the rates with the high LVR or lower deposit, you get charged a low equity margin on top of the advertised rate or the standard rate, which essentially means you're paying a bit more for that money than you would be if you had a 20% deposit because the risk is a bit higher there for the banks. Yeah, anything you want to add, Smithy?
Yeah, I guess just on the live application versus pre-approval thing, because this always is a bit of a yeah, tricky thing at times, just with the
Mm,
it's kind of I always explain it as like a bit of a drafting gate for anyone that's from the country. Um,
no.
it's like they'll open the gate and then they'll
Yeah.
shut the gate and they'll
Yeah.
open the gate.
Yeah.
So when they've got funding available, so like when the banks have got enough money to be able to borrow to people with less than a 20% deposit, they open the gate, and then when the money starts running out, they shut the gate. And that's not to say there's no money available, but when they shut the gate, they expect that you have a live sale and purchase agreement. So you've been out, you've found a property, you've got a sale and purchase agreement, the offer's been accepted, and you might be working through a 15-day finance clause to get your finance approved, and that's where we obviously come in. And a lot of people then go, "Oh, that seems a bit scary, making offers on houses, not knowing what my budget is because I've got no pre-approval." But again, that's where we kind of work with you to set that budget. With all the information that we gather from you as part of the application process, we can be like 99.9% sure about where your borrowing capacity is. And almost 100% of the time when we send someone out to go sign a sale and purchase agreement, it all works out. So they go and sign it. We send the application off as soon as it's live. Bank approves it. Everyone's happy. So yeah, that's how that works. And then I thought we'd chat through 20% deposit because there are lots of rich granddads out there that are helping their kids get to that 20% deposit mark, or maybe some people are really diligent and able to save to get to that 20% deposit mark. Some people are in areas where getting to 20% is a lot easier.
A
Um,
lot more achievable, yeah.
yeah, so we'll chat through having a 20% deposit because that's kind of like, I suppose, the gold standard. Um, so yeah, do you want to chat through those points?
Yeah, so with a 20% deposit, there's a lot more option to get pre-approval with the banks. And obviously, if you've got your pre-approval from the bank there, and then you can go and put an offer on the property more confidently. Often it can make your offer to the vendor more attractive too, because you can say, I've already got pre-approval in place. Yeah, it allows you a lot more bank options, less hoops to jump through. So you don't have to get like valuation, um, other hoops,
Well, I guess there's just a little bit less scrutiny on your
less screw.
overall application, right?
Yeah,
Sometimes when you've got less than a 20% deposit, sometimes the bank is just a little bit more fine-tooth comb to make
yeah,
sure that
yeah.
you know that everything's all tickety-boo. But if you've got that 20% deposit, sometimes the banks can be a little bit more fast and loose with giving you the approval, I suppose, is what that.
More approvals available. Yeah. You're going to get the best interest rates that are on offer as well. Now that mentioned there of valuations, if you have a less deposit of less than 20%, the banks are generally going to want you to get a registered valuation on the property that you're buying. That's just to make sure that the property's worth what you're paying for it. Again, um, it is ticking off their risk, making sure that the risk they're taking is valid, I guess, that the property is not worth much lower. Um, that can end up costing the purchaser about $8 to $1,200 for a registered valuation. So again, yeah, if you've got that 20% deposit, you're not going to have to get a registered valuation. Um, Yeah, which is great.
Yeah, and that last one I just tacked on
Mm.
there to say like more property types open up. And what I mean by that is there's a few property types like lifestyle zoned property, so something slightly bigger with a bit of land, for example, or something really small like an apartment, can sometimes be excluded from those 5 to 10% type approvals. And so if you're thinking that it's a lifestyle property that you want to buy, there are some options out there. With a 10% deposit, I can think of a few that we've done lately, but the options open up, yeah, when you have that 20% deposit. So if you think that you're getting pretty close to that mark, or you've got a way of getting there, then maybe it's worth, chatting to one of us and just seeing whether it's better to get stuck into it now, with a lower deposit, or waiting until you get to that 20% mark. I mean, we're always fans of getting stuck into it, as soon as possible, really. um, Sweet, KiwiSaver. You're the ex law person. You should be good at this.
So, yeah, so you need to have been contributing to your KiwiSaver for 3 years before you can withdraw it. Um, it must be your first home and your owner occupied, that meaning that you're going to live in it. So you can't draw down your KiwiSaver to buy a property and then rent it out. You have to live in that property. There is you need to leave $1,000 in your KiwiSaver. So basically, if you went and looked at your KiwiSaver balance now and it said 43K, you would be able to withdraw 42 towards your deposit. Your lawyer would help you with withdrawing your KiwiSaver funds from your KiwiSaver provider, but you should be able to contact them to see how much you've got in there and then see if that stacks up to get you close to the deposit you need.
Nice. Um, I guess just to cover off second chance KiwiSaver, because we get asked about it a little bit
Mm.
as well. For people that have owned property before, there is the possibility that you might be able to get KiwiSaver out, but the criteria are pretty tight. So if you haven't used KiwiSaver, so if you purchased a house way back and you've sold it and you didn't use KiwiSaver to buy that house, you may be eligible to withdraw your KiwiSaver to buy a first home. Um, and I think that's probably just one of those conversations that you have with us. We can check whether that looks like it's eligible before you go through the process. But effectively, as long as you don't have the means to pull together a 20% deposit, like if you had a caravan worth 150K, you probably wouldn't
Probably
be
going to
able
tell you to
to.
sell it. Yeah.
Yeah, they're going to want you to sell that rather than withdraw your KiwiSaver. So it's just working through that application process. But for most people that go through it, who seem like they're eligible, it seems relatively straightforward to be approved to do that. So
Yeah.
cool. And then I guess guarantors and gifting are things that come up pretty often as well when we're talking about deposits. Um, And I think the thing that we really wanted to highlight with this is that, you don't need to get to 20% to make this happen. There's lots of options before getting to 20%. So it's not totally necessary to to have a guarantor or to have a rich granddad, like I say, to provide gifting. We tend to try and steer people away from having guarantors involved. So a guarantor typically provides, it might be mum and dad who have got a house that has no borrowing on it or very little borrowing associated with it. And they will say to the bank, hey, we'll offer this property as security, um, to de-risk the application, for our kids. And so the bank is able to then take security over mum and dad's house, and also the house that you ultimately end up buying. The issue with it is that, not only does it require both parties being at the same bank, so like if mum and dad were with ANZ, you'd kind of also need to go to ANZ, so it reduces your options. But it also means that mum and dad need to be assessed for the borrowing. So there was a time where that didn't really happen. It was kind of like mum and dad could just offer up their property, the bank could take security. They didn't really need to be involved too much in what was happening with your own situation. But these days, with responsible lending legislation and stuff like that, it's becoming quite hard for guarantors to be approved alongside, a son or daughter
They
borrower.
want to see that the parents can service the lending if the kids can't, right? And
Yep,
often, if the parents are retired or getting to a higher age, they might not have the income to service that.
you got
Correct.
it.
So,
Yep.
yeah, they just want to, if the kids can't pay it, they want to see the parents can. And often the parents might not be in a position to, even if they have a freehold property.
And I think the main thing about it is that it just limits mum and dad's options
Mm,
in the future. Everyone's tied into this
yeah.
transaction, and it's quite hard for that to be unwound, so to speak. So I think all of that to say it's possible. There are some very niche situations where a guarantor may help, but the other options should probably be explored first. And one of those other options is gifting or mum and dad giving you a loan, basically. Um, and we'll just chat through that, some of those things. Do you want to take that?
Yeah, so often what we're seeing, and a great option, is for parents or families to gift the money to their children. Um, that might be so mum and dad might own their own property and it's freehold. Mum and dad, or that mum and dad might have 200K cash and they can lend it to you. But what they could do is take a loan out on their property and loan you the money, the smaller amount, to get you up to the 20%. And then they're not liable for your entire lending. So it frees them of that, I want to say burden, but that,
A liability, I
the
guess.
liability, yeah. And if it's borrowed over their own property in their name, then they don't need to get tied up into your borrowing or your security. Yeah, it's just a lot easier if the parents have other things they want to, like if your parents want to do their own investment or buying and selling, then they don't have to worry about what they're tied up with you, but they're still able to help you. Um,
Nice. And that doesn't necessarily need to be, hey, here's 200 grand. We never expect to see it again. Like,
mm,
be recorded as what we usually see as a deed of acknowledgement of debt, which basically says, hey, we're giving you this 200K or whatever the number is, to go towards your deposit to buy your first home. We expect that that money comes back to us, but that may be on the sale of the property. It's not that you're needing to make repayments towards it week to week. It's more like, in the event of a sale, that money
that
would
comes
would
back.
come
Yeah.
back. Yeah, and it's a really good way of protecting mum and dad's money as well. Like, if you've got, a young couple going into their first home, relationships do break down at times. We see that quite a bit, unfortunately. But if that was to happen, then, if it was Tom's parents that were giving the deed of debt, then Tom's parents would get that money back at
It
that relationship separation.
safeguards them in that money, doesn't it? Yeah.
Yeah. And I mean, we don't get too involved in what the terms of those agreements are. Like, we usually leave that up to lawyers, and it's good for everyone to get their own independent legal advice there. But we do sort of work with you and with your lawyer to get the deed of acknowledgement of debt or the agreement into a bank friendly sort of document, because ultimately
Mhm.
um, they kind of call the shots, don't they?
Yeah, they do.
I'm not sure that we've got any other slides beyond this. We don't. That was pretty much everything that we wanted to cover. It's like I say, it's a 101. Um, all of it basically to emphasize the fact that there's some really good options out there at the moment. The banks are certainly keen to borrow money to people to buy their first homes. The KO scheme is a really good one if you meet that criteria. And if you don't, then most of the banks are actually open for those pre-approvals. So now is quite a good time to jump on, if you've been thinking about it. And where we kind of fit into this process is to work with you to give you a clear pathway to getting approved and to purchasing your first house. And then we obviously do a whole range of stuff after that, in that we provide advice around the structure of the loan and getting the best result there. So we're kind of around for the full 30-year loan term is the idea. Hey.
We're around longer than we plan to be working, hopefully.
Um,
But
and
yeah, I think just reach out and have a conversation because you don't know what you don't know. So even if, yeah, like I said, you don't meet the criteria, it's really awesome to have a plan and to know where you need to be to get there. So a lot of people that we speak to, they ring up thinking that they're not even close, and actually they are, especially with these schemes available and these other options. So it just definitely pays to have a conversation.
nice. Rightio. I think there are some questions. How do I do this? Cool. How many lenders do you work with?
How many what, sorry?
How many lenders do we work with?
Over 20? All the main banks,
All the main banks and then a range of else near
other
to banks
banks.
and non-banks, right? So
Yeah, all of them.
you may have heard of second tier lenders before. We work with a range of, and I think that term kind of has some negative connotations, but there's certainly some lenders that
Mm,
fill a need in between your main five banks. And
100%.
yeah, so I guess that just means that we've got more options for more people and more situations. So yeah, we work with the main five banks, and then we work with a range of near to banks like your SBS, Co-op, TSB, and then a range of banks sort of alongside that, or non-bank lenders as well. How do we get paid?
Well, not by you, so don't worry. The
You want
banks
to
pay us a percentage of your borrowing, essentially. So we work for you, and we get the best options we can for you and work out the best structure, but the banks actually pay us. So the bank that you choose to go with. Um, yeah, essentially, the banks will
Yeah.
pay us a percentage of your lending.
And I think that's, it's a win-win-win because it means that people can get that advice effectively for free.
Mm,
Um, we just want the best result for our client, and if we get them approved and they're able to go on and do what they want to do, that being, purchase their home,
that's
then paid and
fantastic. Yeah.
everyone's happy. So yeah, so
Mm.
it's a good model, and you don't need to stress about a big invoice coming into your inbox on
Yeah,
settlement.
and if you do have a chat with us and it doesn't eventuate right now, we'll do our best to get you in a home as soon as we can. But if it doesn't, there's not pressure there either. So just yeah, come back, keep coming back, but it's don't feel the pressure to rush anything either, right? We're here for the long, like you say, we're here for the long term. Yeah, we're not gonna pressure you into something so we get paid.
And then finally, this one. Oh, can I bid at auction with a
Oh,
10% deposit? Do
good question.
you want to cover
So
that?
the first thing that comes to, so can you bid at auction with a 10% deposit? You can. I would say it's a little bit trickier with banks requiring a registered valuation on a property if you've got less than 20% deposit. So you could end up doing a lot of work and spending a lot of money, not well, spending money um, for a property that you don't end up getting. When you go to auction, if you win that auction, essentially you've signed an unconditional agreement. So you have to be really confident that you can get the lending, like that the bank will be happy with that property, that all your reports and due diligence have been done. But yeah, you would need, if it's less than 10%, yeah, you need that register valuation. So if you're prepared to do that,
Yeah.
then take the risk.
And like we don't really see too many people doing it, do we? And we'd probably scare people away from taking the risk,
Yeah, I
obviously.
don't want to scare people away, but it is a risk. Yeah. And if you, yeah.
And I guess like in this market, I think agents are taking properties to auction, and they're not necessarily selling at auction because there are a lot of people
Mm,
in the market that need registered valuations and need to have finance conditions, and so it's important to make sure you're doing your due diligence. And if there are properties going to auction, then by all means run them past us to see like, hey, would this be viable for me to go to auction? And we can chat through the risk there and what the options are, if any. And then if you can't go to auction for whatever reason, then hey, we just have you first in line to make an offer,
yeah.
subject to finance once the auction falls through, if it falls through, which is hard, I know, because a lot of people get their heart set on a particular property and it's being marketed by auction. But in this environment, don't write those properties off. I don't think you can.
No, I agree. Yeah.
Okay, cool. Well, I think if that is it, let me just quickly check. If that's it, thanks heaps. Thanks for coming along.
Yeah. Thanks so much, everyone.
Lunch break, probably. Uh, we did take a recording of this webinar, so we will distribute that. And if you've got anyone that could do with having a watch through, then by all means, please forward it on. Otherwise, thanks for coming.
Yeah.
Thanks.
Thanks so much, everyone. Awesome. Have a good day.
See you later.